Welcome to this presentation of Other Candlestick Patterns. This is the Specialist Trading Weekly Forex lesson for July 8th, 2011. There was a little confusion this week from some of our members asking why we did not post a particular signal. And I'm going to go into detail and show you why this wasn't a valid signal and show you how this is actually a different pattern. But before we begin, we ask that you please take a moment to view our disclaimer. I'm going to show you the performance results from this past week as well as show you other candlestick patterns. But remember, we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer and then we shall begin this week's Forex lesson. Okay, let's start out with an email that was received from one of our members, and it says, Stephen, why wasn't a strategy number 5 short signal given in the Eurodollar on the close of the 5th of July? Thanks, CA. Now this is a valid question, but this is a confusing situation because many members who are still learning and who are new to strategy number 5 especially will see a pattern when it actually isn't there. And what they are seeing many times is an evening star. This is a particular pattern, a candlestick pattern that many students will see and they'll think it's a valid signal and then they're wondering why we didn't post it. Let me just show you the actual chart that we have in question here. This is the Eurodollar coming into the date of question, and as you can see we were originally below the buy-sell line, but then we kind of popped up above, but we're really basically still straddling. We can go either way. Now an evening star is this 3-bar pattern right here. You have an up candle followed by pretty much a doji or a sideways movement and then a downward. All right. So what this is usually calling for is some type of a top. Now a lot of students, especially beginners, will confuse this with our strategy number 5 pattern. Here's the difference. A evening star is a 3-bar pattern, as you can see right here. 1, 2, 3. Our strategy number 5 signal is an only 2-bar pattern. So there's no way they can be the same. What we're looking for is more of a reversal type of feel, where we're going up, headed upwards, and then we totally reverse and change direction. A evening star is more of a rounding formation. That's why we have 3 bars. We kind of slowly roll over. All right, not to say that this is not valid, though. This is still a valid, setup. Not by our means. We don't have a strategy built around an evening star, but it's still a valid kind of topping formation that you can see in candlestick patterns. Let's say you wanted to use this, remembering once again that this is not an actual strategy, excuse me, by specialist trading means, but simply a topping candlestick formation where you still could have applied our guidelines and our format and saying, okay, I'm going to use this as a topping formation here, and if I went short, where would I be selling? Well, I would be once again selling 1 pip below the low of this finalized bar here in the pattern. All right, so this is where I would be entering if we traded there on the next bar. Once again, these are all just the guidelines and the rules, requirements that we apply in our strategies, but you could simply apply them over into anything else as long as they still go with our concepts of trading with the trend. And as you can see, you would still apply the same exit levels using the same techniques that we've taught you, and look what happened. In the next 2 days you would have had a nice roughly I believe about 100-150 pip gain. So even though this wasn't a signal of ours, you can still apply our techniques and concepts that I'm trying to teach you. See, that is another thing that's come into play as well. A number of students will say, well, Steve, I didn't see a particular a posting of a signal, or maybe I did see a posting of a signal and I didn't think it was an actually valid signal. Remember, I am posting these from a discretionary point of view. Many times students will question why I had a signal up there and why I didn't. Out of all the signals that I see from the 7 currency pairs we're currently tracking, I am posting the ones that I feel have the greatest beneficial or the greatest benefit for having a successful trade. They have the highest probability. Many times there will be a signal using our strategies that I do not feel will really be a high probability trade. Maybe there's too much risk involved, maybe the market conditions, just it doesn't feel as if it's a good signal. So I will basically not post it, or maybe I will post something that's questionable because I think it actually, even though it doesn't fit all the rules 100%, maybe it's fit the rules by 80 or 90%, and it's still going to be a valid trade, so I will post it. And a lot of students have questions wondering why they don't match all the rules or nothing is 100%. Remember, these are not systems. This is what I repeatedly tell to all of our students, especially beginners. These are strategies. Strategies give you at least 25 to 30% room for discretion. Discretion meaning you can take a trade, you can post a trade. Discretion meaning you won't take a trade, or you will take something that may be a little questionable. I want you to become a part of the process. Now, had you seen this setup here and you were familiar with evening stars, even knowing that it's not a strategy number 5 setup, if you were familiar with this, you would say, hey, I'm going to apply the techniques and concepts I've learned from specialist trading and see if it still works, and you would have had a profitable trade here. Now, once again, this is what using your discretion and your knowledge that you've taken from specialist trading. So everything isn't cut and dry. We're not posting signals so that you can simply blindly take them without understanding. And all of the signals that we post on a nightly basis, or when we do have signals, are not in a systematic form, meaning that sometimes I will not post something that I feel is not a valid signal, meaning that it doesn't feel right or it's got too much risk. I wouldn't want anyone to take this particular trade risking maybe 300 or 400 pips. So we just won't post it. Okay? So I just want you to understand that coming in to the game plan here, that these are strategies, and I want you really to understand that, so that when you go on your own and you're not reliant on these nightly signals that I post, you can see them. You can see these signals in the numerous other currency pairs, and you can decide for yourself whether you want to take them. Okay? You have to make adjustments to what you're feeling with the market after watching the market, and as to just getting a good feel for watching the currency pairs. All right, so let's now talk about our closed trade for this week using strategy number 5. We finally closed another trade. This has been an extremely slow 2 months here. A lot of students have been emailing me asking, is there something wrong with the strategy? With the relay process. I haven't received any alerts. No, there's nothing wrong. It's just that it's very slow. Remember, our strategies are built around trading with the trend. That's our number one concept. And if there is no trend, if you've seen a number of these currency pairs are pretty much going sideways the past couple of months, then we're going to stay out of the market. That's okay. We'd rather be on the sidelines than be getting whipsawed and getting hurt. Now, this was our closed out trade for this week that we had been in for about a couple of weeks. This was in the dollar yen. We went long basically on the 28th, just almost a couple of weeks ago on the 28th at 80.99. Guess what? We got stopped out today, Friday, at 80.94. We lost 5 pips on the trade. So we basically broke even. So why would we break even on this trade? Well, firstly, let's look at the buy-sell line. Now, coming into the trade, actually price is below the buy-sell line. But remember, if we want to go into detail with the buy-sell line rule, we have to state that if we're going to be going long a trade, we must enter above the buy-sell line. So our entry here was, even though 1 or 2 pips above, it was still a valid entry. So here's our setup bar, our signal bar right here, out of our 2-bar formation. But here's our setup bar, meaning this is the bar we will go along or enter if we trade above that. And it's above, just barely above the buy-sell line, so we took the trade. I felt it was a valid signal. Now, this is what I've been talking about. Someone else who is looking at this may say, you know what, I really don't feel comfortable about this. Even though we're going long 1 pip above the buy-sell line, I just don't feel as if it's that valid out of everything I've studied and seen. So I'm not going to use this as a valid signal, so I wouldn't take the trade. This is what I'm trying to instill in you. This is what I'm teaching you. I may use it as a trade. Someone else may see it as it's not a valid signal posting. So this is where the postings come into the discretionary play. So just because it's posted doesn't mean you have to take it. And just because I posted it means that if you were teaching the class, maybe you would not have posted it. This is where our results are going to be different. But hopefully we'll all still be in line and we'll all have this positive, upwards trend to our P&L. Now we entered long at 80.99, as you can see here. All right. Now, once we entered, we figured out where our exit level would be, and that was 81.67. So we placed an open order to exit. But since we're trading conservatively, once again, another option that you may not want to take, we're using the 50% rule, meaning that if we traverse half the distance of where we want to exit, which was 50%, we'll move our stop to unchanged. And when we got there Thursday, we moved our stop to unchanged, and guess what happened today? We went right back down, we got stopped out, and we lost basically 5 pips on our slippage. Okay? So this is why we are exiting on this trade and why we're just basically breaking even with a small minor loss. Now, someone who's trading more aggressively may say, you know what, I'm still in the trade. It has not met our stop level, so I'm actually still in this. Now, come Monday, if we happen to get a big rally and we exit, I turn this decision into a profitable trade, whereas Steve got out with a break-even trade, and someone else may have once again seen this and said, you know what, I wouldn't have even posted this as an actual signal because I really don't feel that comfortable about going long only 1 pip above a declining buy-sell line. So you see, these are strategies. There's a number of ways to decide whether you want to post the trade, whether you want to actually be in the trade, and I'm going to be teaching you these on a weekly basis in our lessons to show you what I see and to try and instill some of this 34 plus years of experience into you so that it'll better make your decisions that much more profitable or successful. Okay, so we are out of the trade unchanged. You could still be in this trade because you wouldn't have been stopped out yet if you're trading more aggressively. Now we have a couple of open trades here using strategy number 5. These are trades that we are still currently in, but we are have not exited yet. Our first one is in the British pound. Now we went short on Wednesday of this week at 1.5989. Here's our 2-bar pattern right here. And this is the last bar of the pattern. So this is our setup bar, meaning we can go short if we trade 1 pip below. And we have to trade 1 pip below on the next bar. Now, as you can see, we are well below the buy-sell line, so this was an easy signal to post. So we went short at 59.89. We calculated where we're going to exit. That's at 58.53. And now we're just simply waiting. We're either going to get stopped out once we come up to our stop level, or we're going to exit with a gain. So we're just basically sitting back and watching. Now, you new students who are just paper trading, who we tell to paper trade, just sit back and watch and see how this trade unfolds. Our last signal that is still in play is in the Canadian dollar. This one we went short today at 95.67. Now we were above the buy-sell line, but then beginning of this week or so, we went below it. So we're only looking to go short. We have our 2-bar pattern right here, and this is our setup bar, the last bar of the pattern. So we went short once we traded 1 pip below at 95.67, and we calculated our exit level, which would be where we'd cover at 94.72. So we're looking to make roughly about 100 pips. Now, we got in short at the beginning of the day, and then we kind of just bounced up. So we're just kind of waiting to see what happens. Once again, we're either going to get stopped out, or we are going to cover our short down here. It's basically a waiting game. I always tell my students it's like fishing. Once you understand the concept and you've placed all your orders, you placed your open orders, your stop and your exit levels, you just sit back and wait. And that's pretty much it. It's like fishing. You've cast your line and you just sit back and see if you get a nibble or so. So the Canadian dollar, we're also waiting to see what's going to happen. Now, if we get some type of a downtrend in this come next week, well, we'll possibly move our stop to unchanged, and then possibly we'll cover our short. Okay, in closing, let's recap. Remember, looking at strategy number 5, the key word here is strategy, all right? These are not systems. If these were systems, I would post each and every signal that I see for our members, and I would give you alerts on all of them, and you would have to take them no matter what. If you had a risk level of maybe 20 pips, or if you had risk of 500 pips, you'd have to take the trade, because that's the way a system works. Over time, you want to see that you're taking each and every trade. But because these are strategies, because there's discretion involved, I may not post all of the signals, or I may post some that you thought in your mind that I don't understand why this is a valid one. I wouldn't go long 1 pip above the buy-sell line. So this is why we want you to learn these, to paper trade, to understand these concepts, so that you'll ultimately be able to make your own decisions. Remember, we post these signals for educational purposes only. They're not simply for you to blindly take the trade. They're for you to look and realize, well, why did Steve think this is a good trade? Why did Steve not post this? And why do I think it's a good trade? So that you can ultimately learn the way I learn from elite floor traders, and so I can make my own decisions, okay? So in order to do that, you must learn the strategies, watch the videos, paper trade for a while, and then you'll get this edge, which is consistency, which is making you a part of the process so that you can decide for yourself which signals to take. Now, if you have any questions about what we went over today, something doesn't make sense, or you want some more information, please do not hesitate to email me at stephenprimo@specialisttrading.com. In closing, I ask you to take one last look at our disclaimer. I showed you the performance results from this past week, as well as showed you another candlestick pattern. And then lastly, we talked about the whole entire discretion process, where we want to make you a part of the game plan, want to make you a part of the decision-making process. But remember, we can in no way guarantee that any of these results will be repeated in the future. Thank you so much for joining us today. Have a great weekend, and we shall see you right back here next week. Bye-bye.